The underwriting process can sound like a scary process, which it can be. There's a lot that goes into underwriting a loan. And really what underwriting is it's risk evaluation. You have automated underwriting systems, which Fannie Mae and Freddie Mac, they design software where you can plug in someone's details and then the system's going to tell you, yes, you're good to go, no, you're not good to go, and here's why. Then you have manual underwriting. Every single loan file has manual underwriting attached to it, where that's mainly a human that's looking at your documents, evaluating your file for risk, and then determining whether they should move forward or if there needs to be a restructure where they change up something. Maybe they lower the purchase price or lower the loan amount or come in with a bigger down payment, or maybe the person needs to show more assets. There is a manual feature that goes into this, which is really when they're looking over your income history, right? If your pay stubs don't match up to how much you say you made or how much is on your W-2, that income doesn't match, or let's say you put that you had worked at a certain place for 3 years and you've only been there for a year and a half. So there's verifications that take place throughout the entire underwriting process where you'll have someone that's going to call and verify your employment. A lot of times they'll verify your income as well. And they'll speak to the employer, they'll fill out some kind of form, they send it back, and that tells them, okay, you said you made this much, this is what the numbers show, and then they'll look at any discrepancies in there. Another part of the underwriting process is they're going to verify assets. If you've put that you have $50,000 in your bank account, and then there's maybe 40,000 that just went in there 2 days ago, they're going to want to figure out where that money came from to make sure that it's not drug money or some kind of illegal form that you had gotten that money. So they'll need to trace those deposits and source those deposits. They'll need some kind of explanation for any large deposits that don't really add up. Then you've also got a soft pull on your credit. So you've already done a regular credit report. As they get towards the end of the loan process, the underwriter is going to do a soft pull. And really that's to make sure that you didn't go out and buy a new Ferrari and your payment for that is $3,000 and now you don't qualify for the loan. Anytime that you're going into underwriting, and this could be before you even go to purchase the house, you can get your loan into underwriting and they can make sure everything's looking good. But anytime you are in underwriting, make sure that you don't do any big purchases, that you try to avoid changing anything unless you speak to your loan officer first, and typically your realtor. You want to speak with both of them, let them know, hey, you know what, I'm thinking about getting divorced. Is that a good idea? Or I'm thinking about buying a new boat, or I'm going to quit my job, right? They're going to be able to instruct you on whether or not that's the smart thing to do, or if it's something that you should wait to do until after you get the house, or if you should even get the property, or maybe you shouldn't even do the refi if you're thinking of doing these things. So those are, anytime you're in the underwriting stage, just make sure if you do have to do something, let's say you have to get a car, the car just broke down, talk to your loan officer first, let them know what the payment's gonna be and how that is going to factor into you being able to qualify. The banks they do check these things. They're gonna make sure if you quit your job, they're going to call right before the loan funds to make sure that you're still working. If you say that you live in the property and maybe you don't live in that property, there's ways that they can check in to see if this is true or not, right? There's also the appraisal process that happens during underwriting where they're going to be looking for such things as, did you add a whole new unit that's not permitted, or is any of it permitted? Did you make changes? Did you rip out walls? Are there illegal structures? Are there issues with the property? So all that will typically happen during the appraisal stage if there's an appraisal done. Usually when the market is pretty solid, then they can do an automated appraisal where basically they're just running your property through a system that's looking at all the other properties that have sold, and then it'll spit out a value. And if the value that the loan officer gave the system is close to that value, then they'll accept it. You don't even need to do an inspection. The one big thing too is with taxes. The underwriters are going to verify whatever write-offs you took or however you filed your taxes, that matches what is on file with the IRS. So, and what I mean by that is a lot of people during the 2008 and that boom, they were doing two sets of returns, right? So they had one set of taxes that they filed with the IRS that showed them making no money, and then they had another set of tax returns that they gave to their loan officer that showed them making a ton of money so they could qualify for the loan. All those days are gone, right? So they verify all this stuff. They verify employment, whether you're working there, if you're still working there, how much you're making, how much you're bringing in, how much you're showing on taxes, where your money's coming from. So they want to make sure that there's the least amount of risk associated with your file as possible. There are banks that and programs that don't verify as much information. They don't care about banks, or they don't care about what you filed with the IRS, but typically their rates are a little bit higher and their programs aren't as good, right, as your regular conventional loan. Usually you're getting the best interest rate and the best options. There are other options if you need to go a different route.